Well, good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, the 21st. I take that back, the 20th of December, 2023. I'm a day ahead of myself here. I'm thinking the 21st because tomorrow, Thursday, I'm going to take off. My wife wants me to take the evening off, Christmas parties, things of that nature. So I said, volumes are thin enough, I'll do it. I'll catch up with everybody on Friday when I do the weekly review for the Christmas holiday. And then after that, you'll catch me on Tuesday. I won't be here Monday, Christmas Day. I'll be enjoying myself like so many others, and I hope to be back Tuesday to do them. If not, you'll catch me Wednesday. But I have every intent. I'm going Indiana. It's right around the lake, so it's very, very simple for me to get there and home. All right. So what about these markets? Well, it's an interesting time without any question. The relationship between Israel and Hamas fell apart. There'll be no prisoner exchange. They brought in the Jihad, one of the groups there. And here was the deal. Release all of our, first, you stop attacking us. That's the first thing you got to do, Israel. Number two, we'll give you back your prisoners, but you got to release everybody you have in your prisons. So if I'm the Israelis, I'm looking at them going, not a problem. I can see we got the makings of a deal. I'll get back to you in a year. And I'm sure they walked out the door. The Red Sea, still dealing with this issue. And the coalition, I'm hoping that all they're doing is getting their ships in place to teach Yemen what's going to happen. And, you have to understand that the situation is one where the party that's worried, of course, is Saudi Arabia, because the last thing they want is they're right next to Yemen. They don't want to be fighting with them again. And I don't see why they have to. This is not a battle between the Saudis and Yemen. It's a battle between Yemen and the free world. It wants to curtail anybody in any manner that goes through the Red Sea. Now, do you think, just curious, that we have, via America, Israel, all the brains of the world, enough satellites and material and guided missiles that anywhere a drone is launched, we can track it in the air, know where it was, and send in missiles, whatever, artillery, and bomb the living hell out of it? And you don't think we can do that? So do it. If not, what are we spending all of our dollars? What is Europe spending its money on? You can't have a terrorist group in any manner run the Red Sea. It could be Iran. They can't do it. We fought a battle with them, if you remember, what was the 80s. You can't have the Houthis doing it. And at the end of the day, you take them out. There's no other thing. You don't negotiate. You tell them nicely, don't do this anymore. This is too far. And then they got to be taught a lesson with the military. There is a point in life where there's reasons for conflict. You've reached it with this, because these are not ships going through there that truly, in many cases, have anything to do with what's going on with Israel and what's going on in Gaza. Nothing. But if everybody's going to be part of it, then the world turns and you go, you really want to do this? At the end of the day, guys, it's Yemen. How many times can I repeat this? We're not dealing in a world power here. We're not dealing in an area that you have to go after the big cities. Launch sites, wherever they're at, take them out. Wherever they're at. They want another situation like Gaza. You think they don't see what's going on? They don't want that. Make it no. All right. Otherwise, inflation's going to go up. Energy prices will go up. You're adding 7 to 11 days on tankers going around the world because they can't get through the Red Sea to the Suez. It's pretty simple what it is. Okay. Now, I know a lot of you at this time of the year you see the services I offer, the charting. If you're not using my charts and you want to follow what I'm doing, one of the popular services that we know is out there is TradingView. And in TradingView, if you're a user of that, you can get all of my indicators in this service. It's the only one that I work with this way. And it's everything from my swing lines, the Bollinger Band, of course, the moving averages I use. You can then make your maneuvers back into the slow stochastic, my version. Don't have to worry about it. As for window envelopes, yes, they'll be on here, but you got to get my values to put on them because I change them twice a day minimum. And outside days. I think outside days are important to highlight. Now, you can turn things on and off. You can do anything you want with it. How do you go and do this? Because it all ties together with courses that many of you have bought. And you know I'm working hard on my new charting course. It's very simple. All you need to do is go to our website. That's iraepstein.com. When there, go to Client Resources. It'll be on the top right. You'll see it. Click on it, fill out the information. The next business day, or if you did it early in the morning, would be that day, we'd see it. We will go in, turn it on, send you an email that it is now turned on. You log out, back in, voila, your indicators are all going to be working for you. Put them on the charts and enjoy yourself. It's pretty simple to do. iraepstein.com, you can move your cursor up to the top here and away you go with that. All right? So, let's go back now and take a look at what we've got because I don't even know how to explain it, but we had a correction. I was amazed this morning. I said, it's the first time I'm putting out a morning update and we got some red on the screen. And then that quickly went away by about 9:30 Central Time as the market picked up again back into the green. And I'm going, we're not going to get a correction. Well, we finally did. The markets broke. And it was time that I think a lot of traders, I've been looking for this because I wanted to take one of these evenings off where I could say, okay, it's time. Now people are walking away. And I think you got that. For the week, you're still up, though, on the mini S&P, up 1.37%. You had a huge outside day to the downside. If you've taken my outside day course, iraepstein.com. While you're there, look in the word education. The course is there waiting for you to take it. Outside day down. So now you have a higher high and a lower low. The market has now broken the pattern of higher lows, higher highs. That does not mean it's bearish. It's broken the bull pattern, though. Where did it also break it against? The upper Bollinger Band. If the market wants to put on a classic correction because it is trying to lose the embedded reading. Now, let's go back just to one day here. It's important if it lets me do it. There it is. On the settlement today, you were at 80.69. If the market loses the embedded reading by the close at anything under 79, then I think price and the 18-day average will come together before you go up and make a new high. So, you're at the first stream. Are you going to get people during the day that get nervous of that? They probably will, but that's what I think can happen. When you come to the NASDAQ, you haven't yet lost the embedded reading. You here, too, had the outside day down. Here, too, it happened right at the upper Bollinger Band. You didn't break the uptrend, though, yet. You didn't quite do that in the Dow. You missed the upper Bollinger Band, but here you're getting, just like in the S&P, you're flirting with losing the embedded reading. If you lose it, more of a correction should be expected in the market where price and the 18-day average try to make a run at each other. And you're flirting with, give you the winks? You're flirting with losing the embedded reading in the Russell. This does not mean the big bull trend is over. Everything eventually needs to correct and consolidate. It could be the signal that that's what's going to happen. As a momentum trader, I'd definitely be worried in these three indices that are doing it, especially the S&P and the Dow, because they're already showing that. So whatever your technique is, I'd be on top of it very much. 10-year note, fully embedded, still bullish. And again, that 388 number. 5-year note, are we going to embed? Well, can't count tonight. So let's go back to Wednesday. Both numbers were over 80, agreed. On the 19th, they were not. That's all I care about. So the market's not embedded. It's an overbought situation. Maybe by Friday it can embed, but it's not there right now. In the dollar index, this was a zone that you should get a bounce from. I'm getting what I expected, not following through just yet. You're not embedded, you're oversold. I'm certainly in the bear camp. There's ways to play that. And if that's ready for a little correction, maybe the euro's ready to pull back a little. A lot of support in the euro starting at 109, let's call it 109.50, down to the 18-day average 109.23. You have not had a bullish pattern here, though, because you've got a still lower highs, lower lows, but the bias is up since you're over the 18-day average. How important is it to know what bias is? On a scale of 1 to 10, for me, it's a 10. And that's because if you're getting regular buy and sell signals, you're always looking to say to yourself, what is the filter on it? Bias should be, to me, an important filter for you. In the March British pound, we're getting our first signals that the market's getting bearish, the very first ones. Lower highs, lower lows, and you closed under the 18-day average. Just by a hair, but you did it, and momentum's pointing down. So before you get back over these highs, I can make arguments that you're opening the door, at least, to go to further prices, potentially the lower Bollinger Band. Bitcoin, I'm going to repeat, January 10th is right around the corner. I believe that each of these breaks are now being bought by people that are just saying, I don't care about charts, I don't care about anything else. On breaks, I want to own this because by the 10th, the SEC most likely approves a number of ETFs. That'll make it legit for the big money to go into them. They'll get listings in different places. They'll suddenly be a legit asset class. That's the thinking that people are going with. Not my personal thinking, but that's the thinking. And that's what keeps moving this market to the upside. The differential between the Brent and WTI narrowing in a little bit was yesterday closer to 550, 529 right now. You can see where the market's having its problem, the 200-day average. You'd been under it so long that when that happened, remember when you fought the battle up right here, which way was it going to go? When it finally got under it, if you will, verified that that should be a legit resistance point. It's acting that way. The trend has been up, the bias up, but that is a target. You're there. If you're going to leave that and burst through everything, get through the highs of Wednesday, because you're in Thursday trade, then you open up the door for the 82.80 area. In the WTI, it's the same thinking. No change on it whatsoever. So that's how I'm viewing it. Heating oil market in an uptrend. Where's the cold weather? I mean, it's going to come. Isn't tomorrow winter solstice? I think it is. And that would be the shortest, the shortest day of the year in terms of sunlight for our hemisphere. And then we actually we get into the winter months and we're there for the longer days. And I'll be out there sunbathing in it. I wish. Higher lows, higher highs, and no, I'm not going to warm weather anytime soon. And natural gas, well, not much of a rally. I wanted it to hit that 18-day average. It's not doing what I wanted. If it gets back under here, it'd be a lost momentum trade that didn't work out by going to that 18-day average. It worked better if you were using the ETF. It got within like half a cent, something like that, of getting to the objective, but you didn't do it yet in the futures. So again, I won't be here tomorrow for no reason. I'm just taking the evening off for myself. I'll be back with you for the Friday. I intend on putting out your weekly charts. You've got them all through the weekend. I want to wish everybody, if for any reason you don't tune in, a Merry Christmas. I really appreciate your viewership. I love when you write me. I like the thumbs up you guys give me. And thank you. I'm Ira. You have a good evening.